The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, what we're looking at to start the show this week is the Dow Jones Industrial Average with the Bradley Stock Market model superimposed on it. For those of you that are not familiar with the Bradley model, it was done by Donald Bradley back in 1946, and what he did was he made a prediction of what the market, he actually wrote the book in 47, but he made a prediction in 1946 that, the market was heavily influenced by the planets, and he took the planetary cycles, the 10 cycles that we look at from the moon out through Pluto, and he gave each of these a weight, either positive or negative, and from that he built this Sidereal graph, which is the graph you're looking at when you look at the Bradley model. You're looking at the combination of pluses and minuses. In other words, if Mars marks up with Venus, that could be a positive, and if Neptune marks up with Mercury, that would be a negative, based on the weightings that they attributed to these. And these weightings were done by what the astrological implications are of the planets. And that was done from Princeton University, from one of their astrophysicists back in the 1930s. He gave a positive or negative bias in the markets based on empirical evidence that they had found. So the Bradley model is a pretty good indicator, but it's far from perfect, folks. It has periods where it doesn't work, but usually at main points in the market, it does a lot of help. Let's put it that way. And we are at the most major point in the last 2 years. In 2012, if you'll take a look at the chart, you'll see we were topping in February, and we did go down February into May. That the Bradley model had that right. Then we had a pretty good rally. And then in January, the January effect is what started the big move up. We were watching that very closely because we had just pulled back to a secondary retracement level right at December 31st, and then, of course, the market exploded out of there. On a long-term basis, the overall market, to me, is as bearish as I have ever seen it in my 54 years in this business. I know I'm out here all by myself on a limb, and I've got my chainsaw out, and the motor started, and I'm already started to saw into the limb, because if this one fails, the tree is going to not only fall, but it's going to hit pretty hard on my head. If the Dow Jones makes a new high from here, I assume that this is not working, and that's what I would look at. But right now, it looks extremely bearish. We're at some pretty significant support in the S&P 500 down at this 1619 level. And as Basil pointed out, the Dow Jones' divergence, has been up on the day, whereas the S&P and the NASDAQ, have both been down. So all I can say is on a longer term, this has a very, very negative implications. I talked about the mother of all tops, and I'll hit on that a little bit later. But this looks incredibly bearish to me on a long-term basis. Now, I need to look at the next one I want to watch is the VIX index, because we have, let's do the utility first. Hopefully, I hope the utility, can someone tell me whether the utility index posted, because I'm on a new system for TFNN, and I cannot see the, what I've posted in the room. But anyway, I put into the room the Dow Jones utilities, and I will put that in there again, and we'll see if we can get it to work this time. There it goes. It's in there now, and it just shows that, we're already below the April lows in the Dow Jones utilities, which in fact is a pretty bearish indication of what's happening, especially when the VIX index hit the 1.618 expansion and completed that long-term pattern that we've been watching on all the indices. And the important part about this, folks, is it's not just this indice, it's all the indices across Europe, Germany, France, the UK, all of them have the same bearish expanding triangle pattern that leads to that three drive to a top pattern. And I have never seen that before, not in everything. I looked at all the emerging markets over the weekend, and they all look bearish. Most of them are in substantial downtrends, and particularly in South America and Brazil. That one looks absolutely horrible. And the Asian markets are certainly bad, too. We've got a call from Finland. Oh, my goodness. Are you there, sir?
Yes. How you doing?
Fine, Mohammed. What can I do for you today?
Okay, I'm calling from Estonia. It's not Finland. You don't want to tell Estonian that, you're Finnish. Bad news.
Oh, well, I'll tell you what. I'm just reading across the prompt, so you're going to have to yell at Al about that. So Estonia, where is that?
Estonia is part of Baltic countries.
Wow, I've never even heard that little country. My goodness. What's the capital of it?
Tallinn.
Wow.
Yeah,
are you near the Baltic Sea?
Yes, Baltic Sea.
Wow.
Actually, I can see the Baltic Sea from here.
Wow, that's cool. What can I do for you, my friend?
Okay, I want to ask you one first about the Bradley model.
Sure.
Because most of the time when I Google Bradley model, all of them come out with June 22nd. And yours is early June, and I just want to know what's the, confusion here for me, that is.
Okay, well, the Bradley model, there are certain people that give certain weights to certain things more than others. I'm doing the Bradley model exactly as Bradley spelled it out. I'm not making any variations. The most common variation that most people use with the Bradley model is to take the lunar events like the solar eclipse and lunar eclipses and also the full moons and new moons and give them a higher weight, which is okay. But the main thing, and they also use Mercury. They use Mercury as one of the things. They give it a higher weighting. I don't do that. I'm just doing it exactly as Bradley did it, and we had it programmed by Ensign. They did the software programming for me, so I know that it's correct, and we've tested it many times. I've gone back well over 158 years, testing the Bradley to see how well it works. So I know that the model is correct. So that's the difference. But on a longer-term basis, the difference between June, early June and June 26th is really, really not very much.
Okay. The next question I have is about natural gas. If you look at the natural gas, does that appear to be having a head and shoulder topping pattern that, might come into around about 340?
Okay, I will tell you what I will do. I will post the natural gas into the Tiger TV and take a look at it. I haven't looked at it in quite some time, but I will do that right now. Hopefully I will be able to do it without too much trouble here, and we will get into it just a second here and go to natural gas and take a look at it. I don't really trade that very often. I hardly ever trade it. So
yeah, for natural gas, I usually trade the oil.
Oil, I trade that all the time. I was a big buyer of oil. Just a second, I have to update it because I haven't looked at it in quite a while because I didn't do anything for quite some time. I don't see a head and shoulder on natural gas at all. All I saw was we made a retracement high up at the 786 level, and it looks like we're getting ready for a pretty good correction to the downside here, and I would expect support to come in around that 368 per cubic feet is what I think it will come in. That would be an ABCD pattern to the downside.
Okay, that's why I had to talk around about 360. And yeah, that's great. Yeah. All right.
Okay, well, good work. Anyway, by the way, I don't know if you've tried the new charting software that they have with TFNN, the Art of the Charts, from Tom's book, but it does a great job of picking out the Gartleys and the butterfly patterns and the three-drive patterns, and it does it automatically on 4,000 to 5,000 different stocks and ETFs. And you have to, determine where you want to enter and what your stops are, but it does a good job of searching, for the patterns, because, there's no way you can do that many by hand.
No, not at all. Yes.
But it does a good job for those of you listening that are interested in pattern recognition. That new charting software that TFNN has is quite good. And I highly recommend it because it saves you a lot of time. In fact, it was giving a gold buy this morning, and gold has had a really nice move to the upside. So that's another further indication that something's there that you have to take a look at.
Well, thank you very much for your help.
If I ever get to Estonia, I'll look you up. Okay.
Well, I say it's a great country. It's very lush. Everybody's
I love the
civilized.
Baltic Sea. I think that's one of the most beautiful places around. That's really something.
And the only place you don't have internet access is probably in the middle of a jungle. You have internet hooked up like crazy. Here.
That's correct. Okay, thanks for calling in.
Sure.
You bet. Okay, we had a couple of questions about the dollar index and also the gold, and I've been very, very bullish gold for since we bottomed back on April the 19th, and the thing that's important about the gold now is we have the gold and silver index, and also the HUI gold bug index, and I don't know. I'm going to have to put this. I'll see if it pops into the room. I don't know if the gold bug index popped into the room or not, but we'll see. If we don't, I'll just reissue a new chart and send it out. But this gold bug index is really interesting for two reasons. One is that we completed that major ABCD pattern down at the 786 retracement. But if you'll notice, the high that was made in September is that 1, 2, 3, 4, 5 expanding wave reversal pattern. That's exactly what we have going on in all the stock indices of the world, major ones. I'm talking about all the U.S. ones, and then I'm talking about Europe, Germany, France, and also, what's the other? England. And so all of them are coming together. All the other emerging markets are heading down. I mean, there's no question about it. And Asia is heading down. And we're going down. And I'm a little too bearish. I better relax a little bit. Okay, the main thing that we're watching, I'll get back to the gold. I'll try to cover stocks a little bit later. We'll go through the gold right now just to take a look at it. But this gold bug index is exactly like the XAU gold bug index. The XAU is the gold and silver index. So that's telling you that we're ready for a pretty good rally, in both, the gold and the silver, if this is, in fact, a major bottom. As long as the bottom holds above the 1322 level in the gold and silver, then we should be, in very good shape. Now, silver, fortunately last night, Sunday night, Mr. Z from the trading room came in and showed that, silver was at a really strong buying opportunity, and I was seeing that also in the gold futures, because gold futures backed off to the 1391 level, which was a 61% retracement from Friday's low, and then it's had a well over a $22 move to the upside. So I think gold and silver have a really chance to have a pretty good rally from this level, and that's what we're watching on the gold and silver front. When we come back from the break, what we'll be doing is I want to go into more of the stock things, because it's very important, some things we need to cover. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted into Tiger TV the VIX index and the comparable pattern that I'm seeing that we had in the Nikkei Dow, which was also the way of looking at the dollar-yen, which was making what we call the 135 pattern, which is nothing more than a market that is making higher lows. It can also be one that is making lower highs. But as you can see, we were watching this thing from way back in the middle of May. Actually, on the 15th of May is when we got our first signal at 1260 in the VIX index, and it's moved more than 30%. To the upside in this, and I think it's just getting started. It's going to not go straight up, of course. The Nikkei did. Whether the VIX is going to do that or not, I'm not sure. But the patterns are very, very similar, going back over a very long period of time. If you'll look at the pattern from August through September of 2012, and then if you looked at the same thing, what happened in the end of 2012 with the Nikkei, you'll see that these patterns have repeated over and over again. This is one of the things that the charting package that TFNN has will help you do. To pick these, you have to decide what you want to trade. But, it narrows down today. I think there were about 26 different patterns that came up out of the 4,500 things that it traded or looked at between all the stocks and ETFs. And so you're down to 22 different trading things. So then you have to decide which one of the patterns you'd like to trade. And all we're trying to do is to show you that these patterns do work, but they don't work all of the time. And that's why they do work, is because they don't work all the time. It's only a probability, because if they worked all of the time, they wouldn't work, because then they would be self-fulfilling, and they're certainly not that, because you have decisions to make on money management, risk control, and other things that are happening as far as the amount of money that you can risk on any one trade. But that's what it's good for, is to try to find these patterns, this new software that TFNN has offered to the folks. And you can get it on a trial basis, so it's pretty good. And believe me, I don't have any, ulterior motive. I'm telling you something that works pretty good. I don't make a dime off of the software, or even on the radio show. I'm basically I do the newsletter, and that's pretty much what I do. But it's it's good information that they have on this charting package. So keep that in mind. Now the next thing that I wanted to cover, because we're getting ready to come into the second part of the break, and that is this really long-term pattern that I see in the Dow that I've mentioned to many people here. In fact, anybody that has listened to me over, since the middle of May, I've been watching this long-term pattern in the Dow Jones, and it goes back 15 years, back into 1998, and we have completed what is the most bearish pattern that you can find in technical analysis, and that's this 5-wave reverse point wave pattern. It's also known as the T6. Gartley, when he wrote his book in 1937, he marked all the triangles as T1 through, I think it was T12. This is the T6 pattern, also known as the expanding triangle. It was sold as a trading system in the early 90s by Wells Wilder, and it's a very good pattern. It hardly ever fails, but it does fail. It's about a 90% probability of winning on this pattern, because you don't see it very often. But we're seeing it, across the globe, and that's what's so ominous about this. And at the same time, folks, we're seeing, really huge divergences in two things that are, really big in our economy. One is the price of lumber. Most of you folks don't trade lumber, and I certainly don't, but the price of lumber has dropped well over 33% over the past month, as stocks continue to make new highs, and that's a very negative factor in my opinion. And the other one that we've talked about many times, and we were very bearish of copper when it was trading at the 370 level, and also the 390 level. All those areas for copper have been extremely bearish, and copper has one of the most bearish charts long term that you can find. I mean, we've made nothing but lower highs for well over 18 months in copper, and I think it's important that I put the chart of copper in the room, in the Tiger Den, which I will do at the break, to show you the difference between what the stocks have done and what copper has done, because that's a huge divergence, like nothing we've ever seen in the markets. And the whole theory is that if things are really great and they're making all these products, and believe me, copper isn't anything that's got electrical current in it, anything. And then also lumber, it's very important to housing. And here we've had this, really big break. So during the break, I'm going to post, both of these charts for the lumber versus the New York Stock Exchange Dow, and then also I'm going to post the chart for copper as it relates to stocks. So come back and listen to the last time of the show.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we're going to take a look at the Treasury bond and Treasury note market here for the next few minutes because we're at a really critical level. I posted the long-term weekly chart in the Treasury bonds, and we've had a head and shoulders pattern form here over the past year. And this is a very long-term pattern, by the way. We've already broken down badly. We're in the midst of coming off of some really strong support down at that 139, 140 level in the Treasury bonds. But this is a really negative picture because this is the last 8 years of a 32-year bull market that is finishing. And it looks like we're going to 10 points lower in the bonds from here is just almost a gimme. That's $10,000 a contract. The question is, how do you get short? And we've had some really strong support yesterday. I'm going to post those charts a little bit after we get done talking here to show you that the spot that we were looking at down at this 139 and change level we're in September bonds now was very important because we've hit that bottom 3 times now, and we're in the midst of a pretty good rally. So we'll be looking for another 4 or 5 points, hopefully, in Treasury bonds. And if we get the sell-off in stocks that I think we're going to get, there could be another flight to quality that would give us one more chance to get the market to the upside. This is one of these trades that, boy, you really got to try to get in and and do the best you can. I was really trying to get short at the 150 level, and we only got to 149.26, 6 ticks away from where I wanted to get in. I sold it a little bit on the downside, not a large position or anything, because when it doesn't reach the price, it doesn't give me the low risk that I try to look for, when I'm trying to find these trades. So the overall scenario of what the Fed is getting ready to look at on a technical basis, and believe me, I don't understand fundamentals. I know the Fed is very powerful. They can do almost anything they want, but they're going to be facing something pretty dire in this next few months or so, and I'm anxious to see how it's going to unfold, because remember, this is a giant experiment that they have with QE2 and QE1 and QE3. It's never been done before, and if it should happen to backfire, then you would be looking at something that could be, quite negative. That is really something. Now, someone asked a question. Let me finish. Someone asked a question about the U.S. dollar, but I want to finish the bonds next, and then we can take a look at I wanted to show you the importance of what we have here in the Treasury notes, because I just went over the last 6 or 7 months in the Treasury notes. Actually, it's a whole year. And you'll notice on the Treasury notes we have that same pattern that we've talked about. We showed it in the Gold Bug Index when it topped in September. The same thing that we have going on in the Dow Jones right now, and the S&P, the NASDAQ. It's this 1, 2, 3, 4, 5 expanding wave triangle. We're seeing it so many things across the financial markets. I cannot believe that it's not going to be something, really, really big happening. So we did come down and make a double bottom on Friday. That's why, and we've been down 5 weeks. That's why I was expecting bonds and notes to rally some this day, and we've rallied, well over, 2.5 points off the bottom on Friday. And we should have some strong resistance up about another 3 or 4 points in the notes and about 5 or 6 points in the bonds. Now, remember, the notes trade about 5 times as much as the bonds do, because it's the short-term paper, 5 years or under, and it is the most active of the interest rate futures to trade. It doesn't give you the volatility that you get with the Treasury bonds, but it does have a lot more liquidity. But it's a very good market to trade, and it certainly follows what interest rates are doing. Interest rates are going higher, folks. That head and shoulders pattern that we saw from going back about 5 or 6 weeks ago is in vogue. Mortgage rates have already started to move up a little bit, so these are things that you have to keep in mind. Now, the question that someone posed to me was about the U.S. dollar, the fact that we're having this big down move today, and I will put up the dollar index here, and we'll take a look at it. But I know it's been negative because of that double top pattern that we've had, over the past, few days. We were talking about this double top pattern many times over the last 8 or 10 days because it was such a big one, and it stayed there for 5 or 6 days. So I'll put this into Tiger TV, and you can see this double top pattern that we had. Now, the first support that we're looking at in the dollar index is going to come in around the 82, 84 level, and we're about 40, 50 pips from that. And that will be equivalent to the euro at about the 131.50 to 132 level. That's what we'd be watching in the euro. So that I think is very, very important. I believe right now, just from a technical perspective, the thing that's really making the dollar move is the Japanese yen versus the U.S. dollar because of what's happening in Japan with the Nikkei. We talked about this last week. We posted in there the long-term weekly chart of the Nikkei Dow going back well over 10 years, and it shows that this last move that we had up to 15,000 in the Nikkei stopped exactly at the 786 retracement, and that's what we're looking at. See, we've already my chart is not updated on the dollar index because we're already trading at that fib number at 82.60. We're actually a few tips below that. We got a call from Bob in New Jersey. Are you there, Bob?
I am. Good afternoon, Larry.
Good. What can I do for you, my friend?
Well, over the weekend I was doing some work on the Dow chart, very long term. I looked at it from 1900 to the present. I looked at it from 1960 to the present. And I wanted your opinion on this. Back in the early 80s, after Reagan got elected, I guess maybe 2 years into his term, interest rates at that point started to go down, and they've continued to go down really to the present. Right? I guess that's sort of a fact. And then I looked at the Dow chart, and I noticed really from 1962 to 1980, late 82, the Dow really went sideways. It traded from around $540 up to around 1,050.
That's correct. That is the exact numbers. It didn't break out above that until about 1982, I think, was when it first took out 1,000. Yes.
Yeah, and then think about the numbers. From 1,050 to where we are today. And I thought about it in relationship to interest rates, because if you look at the bond, the 10-year bond, right, it's gone down in price. You've spoken about this many times.
Yep.
And so the reason I called, here's my question. There's been a feeling amongst investors and the media that what could happen is money could come out of bonds and move into stocks. But based on what we've just spoken about, couldn't money come out of bonds and move into cash?
Yeah, just to pay off debt. That could be possible too. You don't really know. Bob, that's one of the things that happens to people when they're trading is they try to rationalize, why things are happening. And I did this for many, many years and would get so frustrated with it. Then finally I realized the only thing that really counted for me was the bar chart. Because if prices were going up, there were more buyers. If prices were going down, there were more sellers, and the patterns would really control what my thought was. And so I tried to get out of that thinking of wanting to know why. I'm not interested in knowing why. I just want to be able to try to profit from it. So that's what I try to do. And, people that are really smart, like doctors and lawyers, they always try to figure out, why things are doing this and why things are doing that. And I don't think it's necessary to be a good trader to make money, because you're interested in making money and not why things happen or for any particular reason.
Okay. I agree with that. But I did have that observation. I thought I'd pass it along to you. It's going to be interesting. I think the next few years going forward are going to be truly interesting times if you're
That's an old Chinese curse, Bob. You know that? May you live in interesting times. That was saying, I hope you fall in a rat hole or something like that is what the Chinese adage is. But for many years I thought that was something positive. And then when I got involved with, the Chinese culture and stuff, and then I also married a Chinese lady, that I realized that was a Chinese curse. And so...
so in other words, it's sarcasm?
Yeah, it's sarcasm. That's exactly right.
That's funny.
By the way, if you have a chance to get into Tiger TV today, I posted a chart of the Dow going back to 1896, showing the Fibonacci retracements, and it shows that period that you were talking about from 1906, was actually about around 1959 when we had the big recession, to 1981 where the market went in a trading band between 1,000 and 500 in the Dow. And then we broke out, and it shows the crash, and it's almost like a little tiny blip on the chart from 1987. But the main thing to look at is this monster pattern that we have that has formed over the last 14 years with this triple top and this expanding triangle. This very, very bearish, especially when it's everywhere. I mean, we're seeing it in interest rate futures across the globe, in Europe, and it's just very ominous in my opinion.
Yeah, I'm going to have to take a look at Gartley's book and find that pattern. I have the book.
It's a T6. It's in between pages 200 and 250. It's probably around page 219. It's right before the page 222 where he describes the Gartley. But it's a very just look for T6. It's between those pages 200 and 250.
Great. Thanks for your time, Larry.
Thank you, Bob.
Day.
Okay.
Bye-bye.
Okay. I did post the long-term Dow Jones Industrial chart going back well over 100 and some years, and you can see that long-term pattern that we have completing now. The Nasdaq is only completing just a little above the 382 from that 2000 high. It doesn't show that in all indices, but because so many of the Nasdaq stocks went bankrupt during the the big run down between 2000 and 2002, that that index changed quite a bit. But most of them are still far below their highs. The New York Stock Exchange Index has also able to make a new high above 2007, and it also is completing the same type of pattern, but on a much more muted scale. In other words, it's actually a little bit more bearish than the Dow chart itself. The combination of all these things, when you look at them, the price of copper, how it's diverged, and the price of lumber, of how it's diverged, and the fact that interest rates are getting ready to turn over, if they've already turned over. The question is what this rally is going to bring. Then it really adds up to a pretty negative, environment. And the other thing is that, and Basil brought this up on his show, that the VIX is acting awfully bullish. I mean, even on days when the Dow is up, like today, the VIX is up. I mean, this is, I know that the S&P is down and the NASDAQ is down and NYSE is down, but, the market is still acting very bullish. Now, when we get to this level that Basil talked about, which is around 1820, I believe, in the VIX, that's going to be the moment of truth, because if you see a print over 20, 20.00 in the VIX, I think you're going to see some real acceleration, because fear is a greater emotion than greed. Prices go down faster than they go up, and the reason for that is when people lose money, their emotion changes from when they're euphoric and making money. Because, as prices go down, it's a good buy here, it's a good buy here, it's a good buy here. Well, that's good buy house, good buy car, good buy boat, good buy account. So that's why prices drop, so much. And fear is a greater emotion than greed, and that's proven by what Hollywood does. Hollywood's, their big box office are things that, cause excitement and fear. Whether it's a Star Trek movie or the Iron Man 3 or Snakes on Planes, whatever it happens to be, fear is a greater emotion, and you can see the physical attributes of fear because it causes diaphoresis or sweating and, palpitation of the heart and chalky white lips, and then also your fingertips get a little tingly. All of the things that you experience every day when you're trading, just about the same thing. Anyway, that's what we're going to be looking at with the VIX index, as we're watching to see if we can get it to move into this level that we want to see it get to without too much trouble. Now, I wanted to talk about, besides the gold that we're looking at, we had a very, very strong signal today in the crude oil. We came down to within just a few cents of the exact 61% retracement off of the April low. And, as long as we can stay above $90 per barrel in the crude oil, we've got a chance for a pretty substantial rally, because it's been in this trading range between 96 and 85 for quite some time, and this is our higher bottom test that we're looking at. It's also making a perfect Gartley buy pattern. This is one of the things that the chart package for that TFNN is looking at, Art of the Charts. They'll be looking for these bullish patterns in the oil stocks, because many of them trade like 100% correlation with crude oil, and you'll be able to see these patterns, so it's a good thing. We got to take a little break here, and then we'll wind up the show. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tiger TV, the long-term Nikkei Dow going back to the high in 2007. And superimposed on that chart is the dollar versus the yen, because it has a correlation of just about 100%. I think it's around 96% that it follows along with what the Nikkei is doing. And the Nikkei, a week or 2 weeks ago, hit the exact 786 retracement at 15,950, which is almost at 16,000. And then we are, we backed off well over 10% in just 2 weeks. We were down another 3% last night, I believe, and we were down 5.6% on last Thursday. Someone asked a question about this Hindenburg-Ullman. If you'll Google it, you'll get a pretty good idea of what it's about. It's about the McClellan oscillator and also the number of new highs and new lows that are coming. And we had one of these Hindenburg signals occurred in late April, and then we had the second Hindenburg last week. It also triggered. I believe it was around right near the lunar eclipse and full moon of the 25th of May, as I recall. And that's when you have these Hindenburg signals back to back, that is very, very negative. It doesn't happen very often. Now, this work was done by Norman Fosback, as I believe. He's really a great market researcher. I've known him for as long as I've been in the business, so I know we're very close to the same age. But he's done a great deal of work on this, and it does work pretty good. So if you have an interest, if you'll check the Hindenburg indices. If you check Norman Fosbach and the Hindenburg omen or signal, you'll see, what it means. It's about, the fact that there's a combination of new highs to new lows, and something like that. Now, speaking of, we're talking about. My mind is wandering here a little bit. We're going to have Arch Crawford on the show a week from Wednesday on the 12th of June. We're going to have Arch on the show. That happens to be Dr. Ruth Miller's, my mentor's, birthday. She's going to be 93, and she's still trading all the time. She can't drive the car anymore, but as long as she can see the monitor, she's as happy as can be. So we'll have Ruth on sometime following that, but we do have we will have Arch Crawford on the June 12th, and then following that, I will have Ruth Miller will come on, and then we will also have Mark Douglas come on, because Mark's got a new book coming out pretty soon, and his wife has written a really good book on trading. A lot of it she gets by osmosis from being married to Mark for so many years, but she's got a really good little book, on trading that I think is quite useful too. So those are the things that we'll be planning for the future. But right now, I think the main focus is on three markets. One is the top in the stock market. Two is the top in the bond market. And three is a potential major bottom in this gold market, because of the fact that this XAU and the Gold Bug Index stopped exactly at the 786 on these long-term weekly charts, and they've had a very good rally off of these bottoms. But if we go below these bottoms, that's very, very negative. So that's where your stop losses would be. That would be equivalent to about $1,622 per ounce in gold and $20.20 per ounce in silver. I frankly don't think they'll be hit, but the markets can surprise you quite a bit. So keep in mind that these are just guidelines, that it's the risk control that determines whether you're going to be profitable or not whether it's got a potential of, moving $200 or $300 an ounce. Someone asked the question, do I think a lot of this money would come into gold? Frankly, I don't think so, because the number of people that trade gold compared to those that trade currencies and the other stuff is very small. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.